I just don't think that enough people have a big enough imagination of this upcoming cycle I'm expecting. I mean, the bond market is in trouble for really arguably the first time in modern financial history. Bondholders are getting absolutely demolished and crushed.
Jack Mallers begins by framing Bitcoin as not just a speculative investment, but as a long-term store of value. He emphasizes Bitcoin's fixed supply and its resilience in the face of inflationary pressures, positioning it as a hedge against the debasement of fiat currencies. Mallers' perspective echoes sentiments shared by many Bitcoin proponents who view the cryptocurrency as a beacon of stability in an uncertain economic landscape. Mallers paints a bullish picture of Bitcoin, citing its track record of outperforming traditional assets and its increasing adoption among investors. He attributes Bitcoin's success to its scarcity and utility as a decentralized form of money. Mallers argues that as more people recognize Bitcoin's value proposition, its price is likely to appreciate further, fueling its ascent as the best-performing asset. Mallers delves into the global debt-to-GDP ratio, highlighting the unsustainable burden of borrowing on future generations. He warns of the consequences of currency debasement orchestrated by governments and central banks to address mounting debt levels. Mallers contends that Bitcoin, with its fixed supply, stands as a bulwark against such monetary manipulation, making it an attractive investment in an inflationary environment.
I'm a long-term holder of Bitcoin, and I have the opinion that Bitcoin's been in a bull market for 15 years. The highs have always been higher and the lows have always been higher. And I think more of the world is waking up to the idea that if you've got one currency that's fixed in supply, and then you've got another currency that's being rapidly inflated in supply, then the one that's fixed in supply is going to appreciate in price against the one that's being inflated. And so I think Bitcoin is going to go up against the dollar, and more people are subscribing to that thesis. So it doesn't shock me that Bitcoin is the best performing asset again this year. I think the narrative that we're living through right now is, my favorite metric is global debt to GDP. The way I like to think about that is the amount of borrowing our governments have done from our future versus the growth they're producing to pay that back. And so we've borrowed a tremendous amount of time and energy from our future in the form of money with no way of paying it back. And that loss has to be realized somewhere. And I think the market is waking up to the idea that the government and central banks around the world are planning to realize that loss through debasing the currency. And you're seeing that in inflation metrics all the way down to New York City. And so if that's the case, it's a race to own hard assets, and Bitcoin's the hardest, most advanced money we've come across in human history. And so I think the recent rally, the adoption of an ETF on Wall Street, a lot of the narrative is they're going to socialize the loss of global debt to GDP and all the deficits through inflating the currency. And you better not own dollars. And if you're going to own something, why not Bitcoin? I think I like the Arthur Hayes quote of Bitcoin's price equals technology plus fiat liquidity. So it is a technological revolution. It's an innovation. Satoshi Nakamoto solved a computer science problem that was perceived to be insolvable before. And so the technology is valuable, and the technology becomes more valuable the more it gets adopted, the more it provides utility to consumers, and there's network effects and economies of scale and all of those buzzwords. But then there's the fiat liquidity piece. And so Bitcoin seems to trend with liquidity cycles within the broader macro environment, within the central bank environment. And so I think it will always, at least in the nearest term, have some correlation to the liquidity available in the market. The funny part about today, David, is high interest rates in America seem to be inflationary. Low interest rates seem to be inflationary. The deficits are just too big that everything's inflationary, which I think has resulted in Bitcoin just trending up no matter what. But I do expect it to be relatively correlated. It'll take some time. As soon as SVB collapsed, I said, that 2% target, you kiss that goodbye. They're going to start to socialize and normalize the idea that, well, what's the difference between 2 and 3? What's the difference between 2 and 20?
Yeah.
I think that government, it's an election year. Government has a decision to make. Do you want bank lines or do you want inflation to run hot? Because your entire banking system is insolvent. And if you're going to save them and bail them out and fix this bond market, then you're going to have to let inflation run hot. And neither is a good solution, but as a government, you got to pick one. And I think historically, governments and empires have picked inflation running hot. They're not going to, if they wanted Jamie Dimon to go to jail for running an insolvent bank, if you run Bank of America's numbers, they're technically insolvent. They could have thrown him in jail in 2008. That's not how they do it. So I expect inflation to run hot and the currency to be debased. Yeah, hard. It's a simple concept. It's the hardest to produce. So how hard is it to make more of it? So housing is harder than dollars because it's harder to create more housing than dollars, but Bitcoin's the hardest money of all because it's the only money that has a scarce fixed supply. So in my opinion, Bitcoin is the most advanced money ever created in human history because it's the hardest money, and money tends and trends to be one, and the one it finds is the hardest to make more of because it's then the easiest way to persist and store value through time and space. You know, I got a different take than maybe you'd read online of the halving. This is my third halving as a Bitcoiner. I've been in the space 11 years. I think of it as an inventory reduction, like a commodity inventory reduction. I don't think it's something that the market can necessarily price in or not price in. I think of it like there's one natural seller in the market, and that's the commodity producer. That's the miner. They have a commodity premium. There's a cost to produce the asset. And in order to pay down the cost that they intake in producing it, they sell the finished good that they produce. And if that is going to be reduced by 50%, then the cushion, the natural sellers are reduced by half. So all that means to me is the cushion that the market has to enter new price discovery is just significantly less. If for whatever reason, there's a newfound demand cycle, like interest rates lower or some new nation state adopts Bitcoin, whatever that is, you're going to enter price discovery in a lot more violent fashion. So I just consider it an inventory reduction, just like the 88 drought for agriculture commodities. And that's why I think you tend to see cyclical behavior that follow the halving, is because there's less cushion and less padding for the market to take on new demand. Bitcoin's going to survive no matter what. The protocol actually adjusts to how many miners are on the network, and that's one of the innovations. The difficulty adjustment is arguably Satoshi's most clever invention. So the Bitcoin network doesn't care. The actual mining business, I think, has got to be one of the most cutthroat, tough industries in the world. From the highest level possible, you are competing against every human on the planet for energy, which is the currency of the universe. So I think that that is just an impossible industry to master. And there are likely going to be miners that have a really difficult time. There's likely going to be miners that are really successful. And like you said, energy is consumed not just in Bitcoin. I mean, human flourishing has a correlation to energy. Our ability to commercialize energy from the sun is what humanity's all about. And so I think it's just a cutthroat industry no matter how you slice it. I just don't think that enough people have a big enough imagination of this upcoming cycle I'm expecting. I mean, the bond market is in trouble for really arguably the first time in modern financial history. Bondholders are getting absolutely demolished and crushed. Now, David, who owns bonds? All of our banks. So our bank deposits aren't there because the bonds that were purchased with my deposit is underwater. And so if central banks and government is going to try and save that market, the amount of liquidity that's needed is going to send assets very high. I mean, you can try and do napkin math. And I joke, like, how many COVIDs are we going to get if they try and bail out this market that we're in today? You may get 2-3 COVID. So if that happens, it's impossible to speculate on an asset as scarce as Bitcoin, but I think 250,000 to $1 million is the imagination I have in that range of just how big this can get. And that's based on all the liquidity that's going to be required to make this market solvent.
Mahlers explores the relationship between Bitcoin's price and technological innovation, as well as its correlation with liquidity cycles in the broader macroeconomic landscape. He underscores the role of market sentiment and liquidity in driving Bitcoin's price movements, noting its resilience amidst varying economic conditions. Discussing Bitcoin's halving events, Mahlers elucidates on their impact on market dynamics. He likens the halving to an inventory reduction in commodity markets, highlighting its role in constraining the supply of new Bitcoins. Mahlers predicts that the reduction in selling pressure post-halving could accelerate price discovery and lead to more pronounced market cycles. Mahlers offers insights into the competitive and energy-intensive nature of Bitcoin mining. He acknowledges the challenges faced by miners in a fiercely competitive industry while emphasizing the broader correlation between energy consumption and human flourishing. Mallers underscores Bitcoin's resilience in adapting to changes in mining dynamics through its innovative difficulty adjustment mechanism.
We're talking about pricing Bitcoin in a piece of paper that's being actively debased, right?
Okay,
So
sure.
maybe a more interesting question is, how many houses can I get for my Bitcoins in a year? But given the fact that it is in dollars, I think that's where your imagination has to go insanely high because of the predicament that the government is in. On the other side of that, though, on the talk of adoption and just the notion of it, I think price is the most accurate KPI we have into Bitcoin adoption. What price tells me is a rather accurate measurement of how much of the world is using Bitcoin as money. And so I expect more of the world to take on Bitcoin as money, whether it be for any form of use case or value to them, because it is so appealing and solving so many different problems. So I expect adoption of Bitcoin as a monetary unit to go up. And then against the dollar in particular and other fiat currencies, I expect it to be violent to the upside. So a guy like me, I'm so convicted. I actually don't even own dollars anymore. I only own Bitcoin. So I have to spend it because it's the only money I own. But my thesis there is I spend on credit cards because I get to borrow a currency that only goes down and spend without owning it. And then I own the very hardest money that is the best performing asset in human history. So I'm running a short dollar trade in my everyday life, which so I have to spend Bitcoin. So that's why I do. But I also, we as a business, we have a product line that moves fiat currencies over the Lightning Network. So we take a little bit of a separate view and view that part of Bitcoin as a payments network. And I agree with you. There are customers of ours that don't want to spend Bitcoin, but they do value faster, cheaper global payments. And so that is the part where the technology is actually disruptive and creating new value and disrupting existing businesses. I think I'd agree. I view Bitcoin as pure humanity in the sense that it's one of the only free markets we have left. And so I love the idea that people can do whatever they want with Bitcoin. So if someone says, I don't want to spend it because all it does is go up, well, I'll shake your hand. Good for you. You might be right. But there's the concept, David, in Bitcoin of capital Bitcoin, capital B Bitcoin, and lowercase b Bitcoin. Lowercase b Bitcoin is when we are referencing the monetary unit, the actual bearer asset. Capital B Bitcoin is when we're referencing the network. What I mean by that is take gold, for example, which Bitcoin is compared to all the time. What is gold's monetary network? It's us human beings. If I wanted to move gold across the world, I'd have to get off my butt, put it in my pocket, get on an airplane, and drop it off wherever I needed it to go. Bitcoin actually has a network associated with it as well, and that's distinct separate value. So you could say that maybe Bitcoin, the unit, can be competitive to the bond market or the real estate market or dollar. Bitcoin, the network, can be competitive to Swift, can be competitive to Visa. It's an entirely different value proposition. So that, to me, we can move fiat currencies over that. Why can't I move a dollar-euro trade over the Bitcoin network instead of the Swift network? And so I don't disagree with you whatsoever. I think the technology is valued independently of your personal spending preference.
Mallers elucidates on Bitcoin's role as a hedge against economic uncertainty, particularly amidst disruptions in traditional markets such as the bond market. He argues that Bitcoin's scarcity and utility as a store of value make it an indispensable asset in portfolios seeking protection against inflation and currency debasement. Mallers expresses optimism regarding Bitcoin's adoption as a global monetary unit, driven by its inherent advantages in terms of speed, cost, and accessibility. He shares his personal conviction in Bitcoin, highlighting his transition away from holding dollars and towards a Bitcoin-centric financial strategy. Mallers also discusses Bitcoin's potential as a disruptive payments network, offering faster and cheaper alternatives to traditional remittance services. Please like and subscribe my channel.